Hey everybody, this is John. Hey, I just got the phone with a client a little while ago, and a very common question, and one that get this question all the time, as a matter of fact. So I thought I'd make a short video just to talk about it. The subject is the RMD, or the required minimum distribution that you have to take when you become 72. This particular client is over 72, and they have to take out the RMD every year. So when throughout the year should they take it? That's really their question. I think their angle is more along the lines of a market timing question, and so I really wouldn't advise trying to time the market, but it is April of 2022 right now, and so their argument was, hey, stocks are at a cheap price, really don't want to take it out right now. They'd rather wait till sometime where they feel like the level of the market's a little bit higher. So that's fine. They didn't really need the money. It's really more they just want to satisfy it sometime this year. If they needed the money for some expense, I would advise them to take it out right away. When you need it, go ahead and take it out. I wouldn't try to time the market. The risk of waiting is that the market could start to go down further. There's no question about that. You could find yourself in a bind at the end of the year where, hey, the market continues to go down and I still need to satisfy my minimum distribution, and I have to really sell stocks at a much cheaper price. So if you really need the money, I would go ahead and take it right now. No doubt about that. Another question I asked them was that, do they have any charitable intentions this year? And so this particular couple, they do give to charity, but they also take the standard deduction. They cannot itemize their deductions. So if they wrote a $1,000 check to a charity, it's great that the charity gets the money, but it doesn't benefit them at all because they can't itemize. So what I would suggest is do what's called a qualified charitable distribution, or a QCD, and you can direct the custodian to send money directly from your IRA to that charity. So what the QCD does, it actually counts towards your RMD for the year, whatever dollar amount it is, and you don't have to pay any tax on it. So I think it's beautiful. So if you you're subject to RMD rules, you want to donate to a charity, and you cannot itemize your deductions, to me that's a no-brainer. So I would definitely talk to your advisor about that for sure. So another thought would be, if let's say that I don't need the money, the proceeds from the RMD, I just want to satisfy it, and in fact I'm going to reinvest the money like in a taxable brokerage account, then there's really not any market timing involved in that, because you're effectively leaving one account, the IRA account, and reinvesting back in a brokerage account. So at worst you might be out of the market for a day or two for maybe processing or reinvestment, things like that. You can also move securities out in kind from an IRA to a brokerage account, so if you wanted to. So anyway, those are just some thoughts on my conversation today with that client. And I know the RMD question is a very common one and is discussed a lot in our industry. So please reach out if you have any questions, or if you'd like me to make another video about another topic like that. Just reach out anytime.